What's up, everybody? Today's video we're going to discuss a few pairs. We're going to look at the Euro Yen trade I took today. We're going to look at Euro USD as well, the King, and a few other pairs. Also going to take a look at Cardano for this fine gentleman right here. Thank you so much for participating. And also I'm going to discuss some quantifiable candlestick patterns for you guys. So stay tuned. What's up, everybody? My name is Heath, and this is Trade Talk. So we're going to discuss a few pairs, but first I must discuss the candlesticks pattern that I'm talking about in the intro, the quantifiable pair, or the quantifiable candlestick pattern. Each candlestick is a range of price for that specific given time period at which you are looking at. So a 15-minute chart is each candle is a 15 minutes worth of a price range. But you don't need any more information than is what is given to you specifically in what you're looking at right here. Candlesticks. All right, so what is quantifiable? Okay, the candlesticks are quantifiable because they give us 4 data points that are not subjective. You know how trend lines and support and resistance levels can be subjective? Absolutely are subjective. It just depends on who you ask which is the right way to do it. So all that's subjective. The one thing that is not subjective is the open, high, low, and close. That is not subjective. That is set in stone. We know that to be fact. So what is this astonishing candlestick pattern that I'm talking about? There's only 3 things that a candlestick can do, okay? It can either be an inside range candlestick, or AKA consolidation. It can be a trend candlestick. It only takes out the high or the low of the candle prior to it. That makes it a trending candle. Only takes out one side of the previous candle. And then we have an outside day or an outside range candle, which takes out both the high and the low of the candle prior to that. That is it. That is it. There is no other type of candlestick in the world. There are only 3 kinds. Let me show you real quick while I got it right here. All right. So, oh, you ain't going to be able to see it. So this candle here is going to be your inside candle, meaning its range, entire range, fits inside of the prior candle. That's an inside candle, or aka consolidation. You will get chopped up if you trade in candles like this on a daily basis. Pretend this is a daily chart, or a monthly or a weekly chart, a higher range chart. You will get chopped up if you try to trade that. Now, how do we know if a candle is going to be an inside range candle, or a trend candle, or an outside range candle? Well, we take a trade and we get stopped out. It's that simple. You don't take another trade. You don't force your will upon the market. Otherwise, you're going to get humbled really quick. We take a trade, we lose that trade, and then we wait it out, and we finally see at the end of the day, wow, who knew it was going to be an inside day? So it's that simple, guys. Now, this big candle here is obviously the outside range, meaning the high of this candle and the low of this candle took out both the high and low of the previous candle. So the outside range's candles range, the whole range of the candle from low to high, takes out both the high and low of the previous candle. That's your outside range candle. And then your final candle is the trending candle. The trending candle only takes out the high, or down here on this side of the picture, the low. So it didn't take out the high of this candle. It only took out the low. This is your trending candle. This is your inside candle, your outside candle, your trending candle. There are no other types of candles. You can call whatever you want to call it, but this is the only three things that a candlestick can do. Okay, and that is quantifiable. There is no subjection in that. If you have a fourth type of candle that I have not discussed here, you go ahead and drop that in the comment section below. I'd love to see it. Why do I use an 8-hour candle for you newer people today? I use 8-hour candles because in a market that trades 24 hours a day, there are 3 sessions. The Asian session, the London session, and the New York session. Those 3 sessions make up the daily range. So you have 3 sessions in each daily candle. And there is also 3 8-hour candles in each daily candle. So three 8-hour candles makes up your daily range. And for the U.S. stock markets, where it closes at 4 o'clock Eastern Standard Time p.m. and opens at 9:30 in the morning a.m., an 8-hour candlestick on the stock's charts is the same candle as the daily candle. You could pull up an 8-hour time frame chart on any stock that you can find, and it's the same as the daily candle. Okay? So that's why I like to use the 8-hour candles. There's an Asian candle, a London candle, and a New York candle. And all 3 of those candles, it's important to know what's going on with those. Where did they close? How did that daily candle shape out to be? And that's why I use them to find my direction. So basically, candles also build sentiment. Okay, you've been taught that this would be what, a shooting star? Well, technically, for it to be a legit shooting star, price has to gap up, then make a high, and then close bearishly, and then gap down the next day. So the shooting star or evening star or whatever is all by itself above the previous day and then the day after. But if this was gone, like if this price action was gone, this would look like a reversal candle, and you would have probably got short with that. Maybe not, maybe you did, maybe you didn't. You got stopped out. This is why sticking with the trend is so very important, because if you lose the trade because the market did reverse, that's okay, because chances are it's going to remain going in the direction it was going before it got to that level. And it's easier to make intraday scalps work better when you have a direction already. What direction is Bitcoin heading? It is heading up. So if you're taking scalping trades, you want to aim for up. So that's, that's I got a little bit off topic, but it's important that you guys understand this. So basically, I got this green line from this candle's close. Why this candle? It's the last down close candle before that candle's high was taken out and closed above it. So when this candle, not only did it trade above it, it closed above it, making this candle an area to target for a retest. And you can clearly see we have retested it. This candle would work as well. But you already got a closure below this candle's low, or below this candle's close, with this candle's close. So that's why I took this one. And now I can watch price dilly-dally around this line until I get a legitimate, what I believe the direction's going to be. And I'm not always right. Sometimes I'm wrong. But that is a quantifiable situation that you can put into play with what I just told you about the candlesticks. They only do 3 things. It's either going to be a consolidation candle, it's either going to be a trend candle, or an outside range candle, which can lead to reversals. So a bearish engulfing, for instance. But that's just knowing that little fact right there and trying to take trades in the direction of the trend and getting your levels the way that I get my levels will help your trading 4,000%. I promise you. So that's enough with the lecture. Let's move on. So basically on Bitcoin, that's what I'm watching right now. If we get an hourly closure below there, then you can move on down to the next down closing candle in this trend. I'm not trading Bitcoin, so I really don't care what it does. It can go down, it can go up. I don't care. If it goes down, I'll buy more. That's just the way I'm doing Bitcoin. I don't trade it. So let's move on to something I do trade. EURUSD. Now, if you watched my yesterday's video, I explained why I got long on this candle here. This green area delineates my position. This red line delineates where my stop is currently. So basically, I have just moved my stop up to the low of this candle. So if price comes back down, takes me out, I'm okay with it because I took 2/3 of my position off on this push here. When we took out this high, my take profit level was sitting right at one spot, 22122, where 2/3 of the position came off. So there's 1/3 of the position left on. And as you can see, it's already double where I took my initial first take profit, which is cool. If this thing wants to continue to trend, I will continue to move my stop up to each candle's low until I get stopped out. And that's great. Now, where's this purple line coming from? The purple line's coming from a weekly structure that I took right here. And that's at one spot, 22515. I took it off of the close of this bearish weekly candle because that's the lowest close before we broke down. So that level is obviously important. And as you can see, none of these candles closed below that area until your breakdown. You starting to see what I'm talking about? All right, so let's go to an 8-hour chart. That's where that purple line is coming into play. And that's why we're starting to see some resistance up here. We did push above it, so anybody that got short in front of this line got stopped out, and now it's moving lower. So we will wait to see where this candle closes in 5 hours. Obviously, I'll be asleep, but I'll see it where it closed when I wake up, and I'll be watching the London candle close for the New York session, and that'll give me a direction, possibly. All right, moving on. Pound dollar. I apologize for this video being long, guys, but the candlestick information is very important, and if you take a look at what I'm telling you, it's going to help you out a tremendous amount. Pound dollar is doing the same thing Euro did. It has broke out. I'm sure if I go to a weekly chart, I could possibly find an area where it looks to be testing, and it's probably this weekly candle here because we're in a downtrend. This is your last up closing candle, so I'll just mark that with this line here, the red line. Go back to my 8-hour chart. Let's check it out. And this is that line here. So I'm going to be looking. Let's get rid of this old target. Goodbye, old target. You did your job. So, and also this red line coming off of that weekly chart also is pretty close to this closing candle here. So we'll see if this catches support. If not, I'll be looking directly below it at this level here, which is one spot 35030. And this red candle of where I'm looking for support hold would be one spot 35314. Do I think the support is going to hold there? I have no clue, man. I do not know. I do not have a crystal ball. I do not try to forecast markets. I simply watch what candles are doing, how they're closing, how they're reacting, and then I base my trading decision off of that data. S&P 500, so we're having a pullback day, made new highs, and trading bullishly. This thing is bullish, so this was a target. Let's get rid of that. This is going to be the first area I look for support to hold. If we don't get a support hold there, I'll go down to this area here. Well, support hold there would be 3711 spot 90. The next area, well, actually, I don't like that because it's a bullish candle. Let's go see if we can find the last bearish candle. Nothing really here. So probably, I mean, maybe there, 3706 spot 70. Maybe that'll find support. If not, definitely below it. Look for 3694 spot 80. We wait for the candles to push through these levels and close above them. If you get one or two candles like that, there's a pretty good chance the market's heading higher. If you get a close below, then there's a pretty good chance on a retest, if it closes back below again, the market's probably heading lower. Gold. Gold had a nice, big, strong, bullish push today. And yesterday, I mean, this thing broke out, took our targets to the upside out, and now we are looking for support. Where will be the first level of support? I will assume that first level of support is going to be right here. Let's get rid of that red line. I don't like it. So I'm going to look, and it also happens to be this high here, but that's the last area that wasn't retested from the upside, which is important also. So our first retest of this level from the upside, we will see if that holds support. That level is 1875 spot 63. The next area to look for support hold is going to be 1864 spot 55. You get an 8-hour closure below that, you're heading lower. Where are you heading lower to? Possibly 1847 spot 77, which is this line here. Okay? Closures above here, it's probably moving higher. Target, next high target is going to be 1899 spot 112. Aussie yen is, it's range bound. I mean, it did close an 8-hour candle above this market structure here. Let me stretch this baby out for y'all. So we did get an 8-hour closure above this market structure here, which is this area here. And we are currently testing that area. If I get an 8-hour closure below there, my next level to look for a support hold is going to be 78.389, 78 spot 389. If that level fails, we're going down to 78 spot 278. And, that offers up targets. If we cannot close an 8-hour candle below here and we start to push back up off of this area at 78 spot 492, your target is going to be now this high at 78 spot 823. Aussie New Zealand is rejecting off of this trend line that I got off of weekly. I'll go show you real quick where I got it from, just in case you wasn't here yesterday or didn't see that video yet. I took it from this high here and tapped it off of the top of that candle there, and so far it is holding as resistance. Now we did test above it, but we closed bearishly. Now, I am not saying that this thing is going to go lower. Get your shorts out and get ready to go, because the sentiment that's being built here is acting like it wants to roll over. However, if I get an 8-hour closure above 1.06414, this area here, I will be targeting this high at 1.06918. Because everybody and their brother is getting short on this thing. And with it trading like this in a range at a key area where people are looking for it to go lower, there's going to be a lot of liquidity built up around these areas. So if we close an 8-hour candle above 1.06414 tomorrow morning, I will look for an entry on a smaller time frame chart, and I will be targeting 1.06918. XAG, silver. Silver had a nice big strong bullish push the last couple days. Beautiful. We did take out this target high here. We have broke above this descending trend line. So let me get this off and I will go show you where I got that. Here's a weekly chart. Same thing, just off this high, and I tapped it to that high. So we have broke out above that. What you want to see is a hold of support no lower than 24 spot 69. I'm assuming there will find some levels in here. Yeah, there's a few. So probably go back to a 4-hour. There we go. Beautiful. Less candles the better, guys, when you're making these levels. First area to look for a support hold is going to be 25 spot 34. And the next area is going to be 25 spot 15. Okay? That's your areas to look for support. If you get an 8-hour closure, or in this case, a 4-hour, well, use an 8-hour because 4 hours give a lot of false signals. Use the 8-hour. You get an 8-hour closure below 25 spot 15, you're heading lower, possibly to retest this trend line. Already looked at Bitcoin New Zealand. Now, New Zealand it's having a hard time closing above this area. So let me show you what that looks like. So this is that area. Oh, no, not. On an 8-hour, we did get a close above it and an instant failure rejection. And now we're trading back above it. So if you get another a hold of this, you can target, which is still in play, this 74 spot 039. Because we have not purged that liquidity yet. So that still remains a target. If we close an 8-hour candle below there, we're heading lower. 73 spot 688 is the next spot to look for a closure below. If you get that closure below 73 spot 688, you can look for 73.492 to be your target. ADAUSD, I'm doing this for my boy. I already have these levels and market structures were from Saturday's crypto weekly outlook. So let's get rid of some of these. I will leave this one here because that one is good, looks good to me still, and is being tested. It was tested already, but massive bullish push off that level. For us to be coming back to test it, it's not necessarily great, but it's okay. It's not bad neither. As long as you're closing 8-hour candles above 0.16, you can look to target this high up here eventually at 0.17688. Now, if you get an 8-hour closure below this market structure, you are heading to test this market structure here at 0.15392. All right? Hope that helps. Euro, yen. Now, this was my market structure here, this white line at 126.016. This morning I was looking at wicks, and then in an hourly chart I went down and I said if we keep closing hourly candles above this level, I am going to look to get long and target this high here. So we did close below but immediately came back out of it. Now this all happened yesterday. This right here was when this morning's trading. So we closed an hour candle right below but then immediately pushed back up and closed strong. So on this candle here, we came back down, but since this candle took out this candle's open and closed above it, that gave me an indication that we were probably heading higher. Being in an uptrend, that's the trade I want to take. So on this candle here, pushed back down, I got long right there at 126.066. Stop just beneath it. Okay? Now, we went all the way up. My target was just below the low of this candle by a pip or so at 126.388. So I had my take profit right at the high of this candle. This candle came within 1 pip of taking me out of the trade and then reversed. Oh, man, that sucks so bad. Because if I go to a 15-minute chart, you can see how brutal it was too. So I was like getting ready to brag to the chat room how awesome I am and how you guys should strive to be more like me. Just kidding. I don't ever do that. But anyways, and then, ooh, boom, big rejection. But my stop was still right here at this white line, and you can see I never did get stopped out, and I was more than willing to eat that stop. It's been a great week. My account's up immensely thanks to EURUSD. So, I mean, I'm in good shape. I was okay to eat a 1% stop, and I never got stopped out. And look where we are now. Boom. This candle right here took me out of this trade with 2/3 of the position size. I have since moved my stop up to 126.220, and I am going to catch this trend if it wants to continue to do so. Why do I think it's going to continue to do so? Well, because you have this consolidation pattern right here, and it's been consolidating for quite some time. And if the euro wants to remain bullish and the yen catches a bit of weakness, we could see this thing breaking out to take out this high at 1.26742. If you get an 8-hour closure above that, this longer term trend line is going to come into play. And I just got that from this high on a monthly chart to that high right there. So that probably will offer up some sort of resistance. However, I'm only targeting this high at first. You get a breakout, a close above, a retest that level, and then a push off. And this thing can go, well, the measured move is a pretty nice chunk of change. I mean, if you just draw a line from, say, this low, from this area here to up, and then just simply move that line to the breakout spot, that's potentially what kind of a measured move you're looking at if this breaks out and holds. You see what I'm saying? So that's what I'm looking for on Aussie yen or Euro yen. I apologize. If I get stopped out and we start closing 8-hour candles below this area here, which it could not close below this morning, which is a 126.016. I will be targeting this low at 125.708. I hope that helps, guys. I know it's a little bit longer of a video because of the instructional content, but please like and subscribe. This channel is just going to get better, man. I'm glad all you new arrivals, thank you for being here. Thank you so much. I appreciate it. And we will talk to you next time.